Let's get talking. Oil and gas are major industries in the energy market and play an influential role in the global economy as the world's primary fuel sources. The processes and systems involved in producing and distributing are highly complex, capital-intensive, and require state-of-the-art technology. Emerging technologies in the industry, Internet of Things, including digital twins, artificial intelligence, and blockchain, will optimize operations, minimize risk, and reduce greenhouse gas emission. Let's talk more about issues around the oil market, of course, globally, and how it relates to Africa's most populous nation, that is Nigeria. And I'm being joined by an energy analyst. He's also a lawyer, Dr. Ayodele Oni. Dr. Oni, good afternoon, and thank you so very much for your time. It's good to see you today.
Thank you very much. Always nice to be here. Thank you for inviting me. I appreciate it.
Let me start this way. As of today, the price of crude is something somewhat above $85 per barrel. Now, if you look at this critically, what does this mean for, of course, a nation like Nigeria and other major producers in the market? What is playing out in the entire oil market?
Okay, so it's one sentiment. Two is the fact that the world continues to need crude, So once it's sentiment around information, supply and demand, and the fact that the world continues to need crude oil despite issues around energy transition. And you remember what Rishi said recently around crude. A number of licenses are being issued for crude oil and gas exploration, exploitation around the North Sea, in the UK and Europe generally. Environmentalists have kicked against it, but said you can't throw away the baby with the bath water. It's important. Energy security is a challenge for the world and still remains a challenge. And as OPEC reduces outputs and takes decisions around cuts, it's going to impact the availability as production kicks on further after COVID and more countries recover after COVID. The world needs energy. The world cannot function without energy. So that would continue to be positive as long as the war doesn't end. The Russia-Ukraine issues around the world, just, the oil and gas generally deals with information. Sentiment affects how prices move up or down, north or south, depending on the sort of information.
Russia and Ukraine...
So it's good for us if we can make the most of it.
Yes, when you say make the most of it, you're taking me another route. Now, we have issues with oil theft in this part of the world, which government is trying to address holistically. How well are we playing on around this? Our production quota, we are yet to meet up with it. I think if we meet up, that's why we can have more forex or more earnings for the country. So which comes first, the chicken or the egg?
Well, it's always difficult. It's always an argument depending on who you ask. I think you're right. In the first 5 months, I think there's a report by the Commission, Nigerian Upstream Petroleum Regulatory Commission, that we only met 56% of our quota in the first 5 months of this year. So it means we still have those challenges we did have. Things have improved, to be honest. There were periods where we met, there were days we met, but largely over that five-month period, we did only 56%. So there's a 44% margin. And that's a margin for prosperity. That's a margin for us to earn more revenues to be able to take care of our people, particularly as government begins to take out subsidy. I say that this government is very market-driven, not so much socialist, and it's got its pros and its cons. And I think what the government does need to do is to provide palliatives, which was what they are doing. But we need income, we need money to fund all of this. So what government is doing, they need to do more in terms of stemming oil theft. I'm sure you're aware of the story of a vessel laden, a crude oil laden vessel that was also found in our waters recently. So government needs to do more to stem this. Government needs to do more, walk the talk in terms of having people produce more, people expend more risk capital in production and ensure safety across the value chain and from production across the pipeline to the terminal. And government also needs to resolve multiple regulatory oversight. You know, the challenge between the midstream and downstream petroleum regulatory authority and the upstream petroleum regulatory commission, issues around who manages the terminal. You know, no businessman wants to pay double taxes, double regulatory fees, double regulatory charges, you know. So I think that's something government needs to do. There's the Business Facilitation Act that is supposed to help facilitate businesses, but it's not sufficient to have these laws. Implementation is critical. You need to encourage people to invest in the sector, to produce more. But if they produce and before it gets to terminal, half of it is stolen, it becomes a problem. People are going to shut in, are going to reduce production. So the world does need oil. This is an opportunity, especially when you now talk about gas. The world does need both. And in the last 10 minutes, I was looking at the statistics. In the last 10 minutes, prices have increased by 0.59%. The Western Texas Intermediate, Brent, most of that has gone up. It's only the Canadian crude that has gone down slightly, you know. So we need to do a lot to benefit from this. And the president has said that he wants to compete with Russia. We need to do much more from a gas perspective. But I mean, that's a conversation for another time.
Now, if the price of crude continues to increase, which is what we seem to be seeing, definitely landing cost of PMS will continue to go up. That is the fact. So where do we find the level ground? Because that is the challenge, and deregulation has already taken its course.
Yes. So that's a very good question. As crude prices go up, we should actually be smiling. Unfortunately, we cannot do that, because if you make $1 billion from selling crude and you have to spend extra, say $1.2 billion from buying back finished products, then you are worse off from a balance of trade, balance of payment point of view. And there continues to be pressure on the Naira. The Naira is about 900 to $1 now, because we're not making the most of value addition to our crude. So as crude prices can go to the roof, it will only mean that, remember that refined products mean you first need to get the base resource, which is the crude. You refine by adding value and then selling at a much higher price. Because you've added value, you refine that crude. So we sell the crude, but we do not refine. So government just needs to push, do whatever it needs to take. I know the president said by December 2023, 1 or 2 of the refineries should be working. That needs to be done. Government needs to meet that target, or maybe even see how they can accelerate. I hear a number of refineries, particularly ND refineries, may also be doing PMS. And I think that's critical. As long as we don't do it in-house, another point that many people miss is that apart from the cost of importing petroleum products, shipping, haulage, we are paying for the labor abroad, which is even more expensive than labor in Nigeria. So I think as our refineries don't work, we can't really smile despite increases. And it then means that from prices are going to go up, because no one is, and it's going to be, and prices will be varied. As you go further inland, interland, it will be more expensive, because things like the equalization fund are no longer in place. You know, so I think it's good and bad news. Good news for our revenue, but bad news when you net it off our importation of finished products.
Indeed, interesting submission there. Good and bad news. And that's the reality on ground, where we must agree to this. Now, let's talk more about refining, which you've touched on. I'm concerned about the Port Harcourt refinery, which, according to the president and the NNPCL, should come on stream most likely by the end of the year, all things being equal. A total rehabilitation of that refinery, I think about $1.5 billion is what was committed to that. We also expect Dangote refinery, we don't know when particularly that should also come on stream. Many believe that if this happens, and the modular refineries, what's the update with the ones you're aware of? You're a major player in this sector. How well are we getting all of this to help start to reduce this dependency on imports?
Okay, so it's unfortunate that the sector, that part of the sector has been abandoned for a long time. So you can't, to be fair, you can't really blame this administration.
Of course.
Because if what ought to have been done wasn't done, it's very difficult. It's easier to destroy than to build. That's the point. So all of those things which ought to have been done 4, 5, 3, 4 years ago were not done, maybe 10 years ago. So we will get there. I understand that this time around there's some seriousness around actual rehabilitation, not just turnaround, actual rehabilitation, and ensure that not routine maintenance, actual rehabilitation to ensure that we can refine sufficiently. If some of these modular refineries, and I say that many modular refineries cannot get to the point of refining PMS because of the cost of buying the particular equipment, which may then make their projects not bankable, or financially rewarding. But a few are beginning to get to that point. I understand ND refineries may. I saw that in the press. I don't know. But I know for the Nigerian refineries, I know 1 or 2 of them will be ready by the end of the year. This government is committed. That's my understanding, and that's what I see. And then a few others will be ready next year. I'm not too sure what's happening to the Dangote refineries. I mean, some of the information I might have may not be stuff I can disclose publicly, but I don't have information that is public knowledge, so I may not be able to say much around Dangote refinery. But for the government refineries, I believe that within the next 6 months, we should begin to see progress, not just here, but experience progress from a refining point of view, and reduce capital flight, reduce the rate at which our currency gets devalued. I think that's critical.
Dr. Oni, interestingly, gas has come the way now. That's the new, the fresh bride. That's where everyone is looking at. CNG for vehicles, and of course, LNG for cooking and all of that. Everyone is talking about gas. And we agree that really that's the way to go. But I know we've gone this route before, but today I'm going to ask you this question this way. The infrastructure to take advantage of the gas that we have in the ground, that's what I want you to talk to us about. How well are we ready to take advantage holistically of gas reserves, both proven and unproven, so that we get to a point that we'll start to, augment PMS, gas usage, and all of that? When are we getting to that point?
Okay. The truth is that Nigerians are very creative. You may have heard people talk about virtual transportation, which is CNG on trucks and all of that. But before we get there, foundation, Nigeria is a gas country more than it is oil. 1, 2. Our gas is very rich in natural gas liquids. That's butane, propane, ethane. We're very rich. And that can be used for gas-based industries, used for fertilizers and everything. So we've got not just gas, which is methane or dry gas, but we've got gas which is very rich in natural gas liquids, which by dewing, it's a mechanism. You can extract that liquid NGL from the gas element itself, or the gas compound. You can remove that bit. So in terms of infrastructure, a lot has been done, to be fair, in the last 10 years. Before now, we had the Alps. A lot has been done with Alps 1, Alps 2, urban, a lot of integration of the northern, southern, eastern gas pipeline. A lot of that is being done. We have the gas transportation network code, and a lot of export projects. Even before now, it was more export because the commercial arrangement was very poor. It improved now, but it's not where it should be. Now, without opportunity, without a good commercial arrangement, no one's going to invest in infrastructure. So we need to, it's not putting the horse before the cart. You need to put you're not putting the cart before the horse. You need to put the horse before the cart, so that there's a good commercial arrangement, then people can invest. Then there will now be that attractiveness. And there is the decade of gas policy, where government is pushing for gas, infrastructure, and all of that. And no government that's going to do much of all of the infrastructure. It's just the backbone. Private individuals are not going to come in and plug in, as long as you have the demand and you have the commercial arrangement that makes sense. So from an infrastructure point of view, so many years of neglect, but things are looking up, things are improving. We're looking at even the Trans-Nigerian gas pipeline arrangement, where we can begin to be an alternative to Russia. We're looking at how we can compete from an LNG point of view with Qatar, Braz LNG that's been abandoned, and a number of these things are looking up. But government needs to do, and I know Olu, who is the president's special advisor on energy is doing quite a lot around the decade of gas to ensure that it becomes attractive. So from an infrastructure point of view, maybe we're 30%, and that 15% of that 30% was done in the last few years, 30-40% of where we should be overall. But locally, we're probably much higher. But internationally, we're much lower. When I say internationally, for us to be able to sell to Europe via pipelines, and of course, there are, broadly speaking, two ways you can transport your gas. You can either do LNG, internationally, you liquefy, or you use pipelines. Over a particular distance, it's more economical to use LNG. So at the moment, it's a potpourri of several things coming together, and a lot is being done. And I know the president is very, very particular about gas. So I think that we're going to benefit from it in the next 2-3 years. We'll begin to see much more, but we're still quite far from where we should be.
Now, before I let you go, you mentioned something that I like us to round off with. Having commercial arrangements that will make sense is very important, because this is what will bring the investors in. Governments cannot fund this all alone. Private guys must come in. Talking about gas, commercialization, a project, and all of that. Do we have those laws in place? Are we putting them in place? I know it's part of the PIA, but are we set to really bring in investors to work and make this sector achieve what we intend to achieve in totality?
Okay, we're actually on our way. Before now, there was no commercial arrangement that was statutorily backed. Now, the PIA does have provisions around gas, around a domestic-based price arrangement from where everything else then moves on. So I personally think PIA, that arrangement needs to be modified slightly, but to be fair, we're actually making good progress around the private arrangements. And remember that there are two regimes. There's the domestic gas delivery obligation regime, and there's also the regime, where you can do willing buyer, willing seller. That willing buyer, willing seller isn't capped in terms of pricing, particularly once you meet your obligation to the domestic market. And there are even ways you can meet it without necessarily selling at quasi-regulated pricing. So yes, we have a pricing structure in place with the authority, midstream downstream petroleum regulatory authority is pushing, and the guys at the decade of gas working with Olu are working on, and things are looking up, to be fair. So I think we're getting ready for business. That's the way I'll put it.
Dr. Ayodele, it's always a pleasure having you on the show. Thank you so much for your brilliant contributions on this topic of discourse. Dr. Oni is an energy lawyer and an analyst. Thank you so much. Have a great weekend.
Thank you very much for having me.